Good morning, traders. This is Nick Van Ice with your Traders Edge update for Wednesday, May 13. Today we're going to focus on a nuclear power company. In fact, they're the largest operator of nuclear power in North America, Constellation Energy, stock symbol CEG. Now, there's 5 reasons that I believe that CEG is going to outperform the market over the next 3 to 5 years. I want to go through these just kind of matter of factly. I want to hit on 5 key points, and then I want to deep dive into the technicals and show you the setup that I think is one of the better trades right now in the market. And if you're like me, you're seeing how overbought the market is. You're looking at the chips, you're looking at the memory stocks, and you're asking yourself, wow, well, I'd like to add, and we're so overbought, it's dicey, right? Just a normal pullback could be 20 to 30% in chips and memory stocks, and we could, and maintain a very bullish posture. So I don't like those type of swings, right? You don't either. So let's look at a company that's kind of right in the heart, if not the foundation, supporting the AI, that has had a big correction, that has very bullish fundamentals, that the market is kind of overlooking right now. That's Constellation Energy. Let's take a peek. So, number one reason, they own and operate the largest nuclear fleet in America. It's carbon free. It's always on a base load of power. They're generating huge amounts of power now, feeding grids, and they're a very profitable company. Number two, the AI data centers are creating a super cycle, a secular trend in all of energy, right? In solar, all clean energy, all power plants, natural gas plants. If you look at the utilities index, you'll see that utilities have done really well over the last few years, and it's being driven by AI. Well, the nuclear power part of that is, I think, at the most strategic at the forefront, because we already have a solid base, and it's being expanded rapidly. So the hyperscalers need this energy, and they're partnering with these companies. The grid constraints are actually worsening, and so there's a lot of money flowing into expanding and easing regulations. And nuclear is emerging as the choice. It's considered clean. It is considered safe. And if you just take the regulations away, you bring a little innovation to it, we're going to see a huge demand. Nuclear power is the answer to this energy crisis that we're entering. Also, massive operating leverage. They've already made the investment. They have fixed cost. If you increase demand and you have some pricing power, which they do, margins can improve. So that's a really good backdrop here. They have long-term contracts with major tech players, most notably Microsoft and Meta. They are partnering. And of course, there are some regulatory concerns, or certain areas that are against the expansion, and so there's that. And you know what? That's an acceptable risk to me if it gets slowed down. And that's why we manage our risk on these investments. And lastly, strong earnings growth and shareholder returns. During the last earnings call, CEG basically projected 20% EPS share growth through 29. This is an energy company. This is a regulated energy company that has a strong base of customers and growing, and they're projecting 20% EPS growth. This is awesome. And they just announced an aggressive buyback of $5 billion. So this is a company with large cash flow, steady expanding earnings, and there's a huge backlog for their product. So fundamental scorecard, let's take a look at this. They're at a market cap of 100 billion. This can double over the next 3 to 5 years to 200 billion and beyond. Analyst consensus on Wall Street's a strong buy. Analyst average price target 385 to 395. That's about 30% higher than it currently is. High target is 481. That'd be epic. Expected upside 20 to 30%. It's got a beta of about the market, 0.9 to 1.0. There's a forward PE ratio of 23 times. 3-year CAGR, 20% plus. It's pretty awesome on that. So let's look at the technicals. Here's the monthly chart. So all of that fundamental backstory just to support this, what Constellation has done. This is a 5-year view of Constellation. Just a very clear uptrend. Every time we hit this bottom of the moving average envelope, we rally. Sometimes forcefully. This was a 100% rally here. We came from a base in early, what was it, 23, around 72. We got to 375. What is that? That's pretty big. That's a 5x. Now we pull back from 400 all the way down to 242, almost a 50% retracement of the whole move. And now we're compressing. Let's take a look on the weekly. Okay, on the weekly, we've broken below the averages, but now we're pausing, and it looks like we're basing out. There's actually an ascending triangle forming, which could be accumulation. I think it is. We have a pattern of higher lows here as prices compress. Let's look at it on the daily. You'll see this compression even better. Check that out. See how prices, we had this nice rally from 240 up to about 335, almost a $100 rally. And then we came down to a 786 retracement. We bounced up here again to test this resistance shelf around 330, just a little bit below that area. Came back down and found support again at this trend line. So this is the third time we've tested this trend line, and this is just this week. So if we compress in here for a couple more months and break out, this is going to have a price target of almost $100 a share. 328 plus 100 would be 428. That would be the all-time high. And then, of course, you get FOMO, and you know the rest of the story. So on the daily chart right now, we've got stochastics are falling. Yeah, we're in a little down cycle, but we're right up against this support. Let's look at it on the monthly. This is what I love. We're pressing up against this trend line, and we have a safe distance above this support area at 261. So at $30, that's about a 10% move. So I see a situation where you buy Constellation, you risk a close below this 260 area, which is that bottom of the moving average envelope, which we have not closed below, what, in 3 years, 3.5 years? So I like that. I like risking 10% to be on a trade that can double your money over the next 3 years. How do you like those apples? Right? Look at that. Look at this strong uptrend, solid fundamental story. It's the picks and shovels. It's at the energy source level of the AI movement. And here we are in key support in a nice price pattern in a long-term trend that could be resuming. So we call this asymmetrical risk to reward. Risk 10% to make 100. That's 10x. So you know what? I'll take those trades all day long, or those investments. And even if you lose on 2 or 3 of them in a row, you get the fourth one right, you're way up, right? So, if you're not in Constellation, you've been wanting to get in it, take a look at this thing, right? Maybe consider dollar cost averaging, buying into weakness, give yourself a month or 2 to get into it. I don't think it's going to stay down there long, but I could be wrong. So DCA into this thing and risk a close below the bottom of the moving average envelope, right? Which is rising. All right, that's all I have for you today. I hope you enjoyed it. And yeah, as always, make your decisions. This is your trade. I'm here to bird dog for you. I'm here to teach you a methodology. You've got to make the decision. You're the decision maker. Be empowered. Manage your risk the way you manage risk. As I always say, you do you. I'll do me. Take care. God bless.